Hi, I'm Kevin Castaneda, and this is Kev's Mindset. And today we're going to be talking about the top couple of stocks that I think are at great value right now. Looking at the market that we're in, looking at inflation coming in as high as it is, looking at potential hikes in interest rate, moving on throughout the rest of the year and next year, and just kind of playing all these factors into effect and paying attention to them and kind of tying them into what stocks we might look to buy right now. So before we get into it, please go ahead and smash the like button and subscribe if you do enjoy this video. So with all that out of the way, let's get straight into it. So the first stock is Disney stock. Now, Disney is a company I completely love. I think that they're a great company. I love their Disney Plus and how they're heading into all of that. I think that they're going to grow tremendously heading in the next couple of years. And, Disney's already a big company. It's a huge brand. Let's say, like Warren Buffett said one time, let's say a mom goes into a store and she looks and she's looking for a movie. She's like, what do I get for my kids just to get some time to herself? What's she gonna buy? She's not gonna buy a random movie from a random brand. She's gonna get a Disney movie. Why is that? Because a Disney movie it's gonna be good. You know that it's gonna give you that peace and quiet that you're looking for. So that tends to be the movie that they end up going with. So I encourage buying Disney stock. I think Disney is a great company. I think that they're trading ridiculously cheap, especially compared to where they've been trading in the past. So to me, they're a value play, but also a growth play. I see them growing a lot more in the future, and I see them being just continuing to be this great company. They're like Coca-Cola is another one that Warren Buffett really loves, but the problem I have with Coca-Cola is how much more can they really grow? Who isn't buying Coca-Cola? Who doesn't already know Coca-Cola? Disney is a thing that where they could get more theme parks in other places of the world. They can get more shows. They can have new characters. They can develop all these different things, because Disney's main thing is having a story, building an image in your head. And that's the big thing. And Disney does a great job at doing that. So I'm a huge fan of Disney stock, and I think that they're going to grow in the next couple of years. Really excited to own them, especially at this price, around $104, $106 per share. I think they're incredible, and very, very bullish on them. Now, for company number two, we're going to be talking about Apple. Apple's a company that we all know and love, that we've all grown up with. Well, not all of us, but if you're around my age, or if you're in your 20s, then you grew up with Apple. So Apple's a great company. They make a lot of money. They're the top. Right now, they're not the largest because a petroleum company passed them, but they were, and they are close to the largest company in the world. They continue to grow. They continue to innovate. They have great ideas, great workers. They continue to look for new talent and new people who are interested in learning, building their skills, and continue to develop new things for the world and continue to develop new technology. That's what you want from a company. You want a company that has driven workers, that has people who are chasing a goal, that has people who want to be there, who want to be a part of it. And Apple really builds that community feeling. It builds that feeling where if you have ever owned an Apple product, the likelihood that you switch to Samsung or Google or any other product when it comes to a phone, a tablet, a laptop, whatever it is, you tend to stick with Apple. Now, why is that? Well, you tend to stick with Apple because you're familiar with it. The product is high quality. It's really good at what it does. What it's meant for, it does it great. You can do so many things on your Apple products, and they all pair together, they sync together, whether you have AirPods, a Mac, an iPad, an iPhone, Beats, whatever it is. And speaking of Beats, they continue to acquire great companies such as Beats back in, 2019, 2018, something along those lines. But they continue to acquire great companies, they continue to build their brand, continue to generate new products, and I think that there's something big coming for Apple in the next coming years. There's no way in my mind that Apple is going to stay the way that they've been. I don't think they're going to continue to just upgrade their phones and continue to upgrade. I think that there's bigger and better things heading in the future for Apple. I think that they're smart enough to develop new technologies and head into the metaverse, even though a lot of people don't believe in it. But there's going to be a certain point in our lives where we do live in a virtual space. Maybe not completely, because we still have to eat, sleep, things like that. But I think it's going to be a big part of our lives, and I think living in a virtual world is where we're heading, and I think it's a lot of signs are pointing in that direction. So I'm perfectly fine with owning a company in the tech space that's continuing to innovate and continuing to be a great company. Now, speaking of the metaverse, that moves us on to our third company, which is Facebook. Facebook literally changed their name to Meta. Zuckerberg is really, really pushing on the idea of building his own metaverse and building a community online. And I think that's one of the biggest things that we've seen in this past decade and 2 decades. We've seen a lot of growth in heading into technology and growing together and seeing everyone kind of come together. We've seen a lot of technology and social media kind of grow together, and we see it like intertwined, and I think it's going to be a huge part of our future, and I'm really excited for it. And I think Zuckerberg has kind of hit the nail on where we're going, and I think that he's looking for a place that people are undervaluing, underappreciating, and he's heading into that space. A lot of things right now happen to be with DAOs and things along those lines, and I think that we're going to head into a period where we need a dominant force in that space. And I think Facebook can very likely be that space that continues to innovate, continues to dominate in that space with Oculus and their new department that has kind of completely shaped itself around building the metaverse. There's a high probability that Meta kind of takes the lead in that. And I have no doubt in my mind that Zuckerberg can execute this despite people's views of him and likings of Facebook. Meta is a new thing, and I think Meta is going to do a great job at building itself and placing itself in the right spot for the future. And I have no doubt in my mind of that. So those are three companies that I really like in the space, and I think that they're going to do exceptionally well. But now heading into a new kind of realm is a company called Enphase. They're a solar company, and they've been holding up pretty well when it comes to when you're looking at other stocks in the solar industry or in the tech industry. You've seen a lot of these stocks fall 20, 30, 40, 50, 60, 70, 80, 90%. And it's incredible. We've even seen some of these companies go bankrupt. It's a lot that's going on in the market right now. And inflation is scaring consumers, it's scaring companies, it's scaring investors. And so you have to really seep through all these companies and look, okay, who has a good balance sheet? Who's growing? Who's innovating? Who's still going to be around in the next couple of years? And the first three I gave you are some bigger companies that are pretty safe. Now, Enphase is a newer company. Well, not new, but they're not like top 5 largest companies, top 10, top 30. They're not up there, but they're continuing to innovate, continuing to grow. And I am more than enthused for this company, and I think that they're continuing to do great things, and I think that in the future they're going to do even better things. Now, they're kind of the lead player in the solar industry in my mind. Now, there's a lot of other companies, there's a lot of competition, but I see them with their generators, with their batteries, doing a lot of great things, and I think that they could partner with companies like Tesla to maybe power some of those things, produce some lithium, stuff like that. And I see them doing incredible things in the future. They're one of my favorite companies. They're a company that I held for a long time. And if you haven't watched kind of my personal portfolio updates and what's going on with it, we could leave that for another time. But Enphase is a company that I completely adore, and I think that they're going to continue to grow, and I think they're going to continue to innovate. I see the rising revenue, rising bottom line. Like they're just continuing to do great. They're lowering their expenses, even with increased advertising. They're just doing great, and they're continuing to hold steady in a market that's very turbulent. So for a company like this, I'm all in, and I love them. Now, lastly, we're going to talk about a financial company. Now, in the past, I was a big lover of Affirm. I still think Affirm's a good company, but in the turbulent times that we're coming into, it's a bit sketchy because you never know if people are defaulting on loans, people are not paying, people are worried, companies start worrying, banks, everyone. When things get worrisome and when people start making less money and income starts going down and opportunity and everything is kind of just lowering, companies like Affirm don't do that great. But we're going to talk about PayPal, which PayPal is in a great position. They have about a 30% bottom line. They're growing revenue. They have great customers. They have great applications. They have great real world usage. And a lot of people use PayPal, whether they use Venmo or they use PayPal itself or other subcategories of companies that they own. And they're continuing to acquire many companies. I think that they're a great company. They're going to continue growing in the future. And I see them as ridiculously undervalued. They're in the 70, 80s, and I just don't think they deserve to be there. They were in the 300s, and when you look at their PE, it's honestly pretty ridiculous for a company that's growing at the pace that they are and continuing to innovate like they are and is set on making money. They're not losing money. They're not a company like that. They're continuing to grow revenue, bottom line, and I think that they're great for the future. I think that a lot of people are undervaluing them, and I see them as a great value play and a great growth play. All 5 companies that I talked about here are companies that in the recent times have been undervalued and have been overlooked kind of because market sentiment's been low. People haven't been looking for new stocks. They've been kind of buying into index funds. And I think PayPal is a great way to go. Now, you can also go for a bit riskier of a route if you go for something like, what's it called? Square. And Square is a great company, but Square is a bit more risky. They don't have as much money on the bottom line. The revenue is growing, but for the valuation that they have, even now, it's still not something that I really want to jump on. So PayPal is really where I'd go if I was looking for a financial company because banks are a bit slow, PayPal's a bit too fast, and and then something like Visa is kind of at a point where else can they go? Where else can they expand on? On the other hand, PayPal continues to develop their things. They continue to partner with people like Amazon when it comes to Venmo, and I think these are some great things. And buy now, pay later is another huge thing that Affirm, as I was talking about, does very well. And I think that PayPal's seeing that, and they've continued to see that, they've continued to innovate, and they're looking for a way to compete there. And I think that's going to be a huge point for them in the next coming decade. Finally, we're going to talk about index funds. Now, buying in the S&P is not a bad thing. Now, I know a lot of stock pickers look down on it because it's like, oh, it's safe, oh, the returns aren't that great. But honestly, you can't really go wrong with these 5 companies, and then like maybe give or take a 10-20% allocation to the S&P. Your money's a bit safer there. I'm not no financial advice, nothing like that. But I feel like you can feel pretty calm if you're just sitting in the S&P 500. You have money growing slowly, but you have a backup plan. If anything goes wrong, you have some cash allocated to the S&P 500, and you can take that money and circulate it between these other stocks. But it's also great to have some cash. With the S&P 500, you have some great companies, growing companies, innovating companies, hardworking people behind these companies. So in my head, I have no problem with allocating 10 to 20% of my portfolio to the S&P 500. I think it's a great rule of thumb, and I think it's going to continue to push us through this kind of difficult time when we're looking at inflation, when we're looking at interest rates rising, when we're looking at people starting to sell their houses like crazy due to the fact that they're worried of all these things coming on. So these are 5 companies and 1 index fund that I think are great to hold in the next coming years, next coming months, and next coming decade. They're going to continue to grow, continue to be great brands, and continue to excel in the industries that they are in. That's all I have for you guys today. Let me know if you have any questions in the comment section down below. Go ahead and smash the like button if you did enjoy this video, and subscribe if you want to watch more of my content in the future. This is Kev's Mindset, and I appreciate your time.